China is one of the biggest economies in the world today. It is the world's largest manufacturing economy and exporter of goods. It is also the world's fastest-growing consumer market and second-largest importer. However, in recent years, China's economy seems to be slipping down, and it is only getting worse and worse. Some even fear that this might only be the beginning, especially with the recent international incidents where the country was not painted in a good light. The problems in China's economy is not a new topic. It has been the talk of the global economic landscape in the past years as various events took place both inside and outside China, and these events spelled doom for the country. However, there are still other reasons why China's economy is in a decline. And in this video, we will talk about the reasons why China's economy is crashing and why it is only getting worse. So stay tuned because we will examine the reasons and effects behind this and how you as an investor can protect your investments from the potential collapse of the Chinese economy. So make sure to watch this video to the end. This is Financial Intellect, where we promote that to be finance savvy, we are your buddy. Now let's get right into the video. Real estate decline. One of the events that marked the beginning of the decline of the Chinese real estate market is the downfall of Evergrande, one of the largest property developers in the world. To make the story short, Evergrande failed to satisfy its debt obligations to international investors. Although it tried selling its assets to raise the money it owes, it wasn't enough to meet its interest payments with its liabilities exceeding $300 billion. This problem caused a major concern with regards to how the Chinese economy is performing. People and investors are worried because they were able to invest in Evergrande themselves, and the company's downfall meant that they could also lose their funds. Worse, it can also send a lot of companies into bankruptcy as well. The Chinese real estate market has not even recovered yet, and now it is again continually falling at a rate of 1% per month. Aside from Evergrande, other companies are also suffering defaults. This can be attributed to various issues, and one of these is China's ghost cities such as Kangbashi, Binhai, and Zhengzhou. These ghost cities required billions of investments, but in the end, they turned out as a failure. 20% of the total urban housing in China is vacant, even though these areas have skyscrapers, road infrastructures, and a variety of public spaces, yet they remained underpopulated. The traditional definition of a ghost city is one that is no longer thriving despite its booming large population. In China, however, ghost cities have a different meaning. Despite the fully built economic hubs and housing, they remained underpopulated due to the lack of economic opportunities and high investment costs. With the failure to attract inhabitants, these cities became unsellable, unlivable, and had unoccupied buildings. With this, real estate companies are put in compromising positions. With host cities, their investments bore no fruits. And if they defaulted as well, just like Evergrande, international lenders may decide to lend less to Chinese companies, and this could result in what is known as a credit crunch. Credit crunch. A credit crunch refers to the situation where a company struggles to borrow money at affordable rates. This will certainly not look good for Chinese businesses, as this would only hamper their growth. Worse, it will also stop their operations. The imposition of the three red line policy by the Chinese Communist Party does not help as well, as it limits how much Chinese companies can borrow. This will of course result in cash shortages that would cause stock price slumps. This is bad for 90% of the Chinese population who are into real estate. If the companies will struggle, who would want to own their bonds? After all, bonds guarantee safety. With this, China has been experiencing a massive exodus of money from Chinese assets due to the ineligibility of real estate development companies to borrow money, declining real estate values, and many other problems. Intense regulatory pressure from the CCP. The Chinese Communist Party has been implementing intense regulatory pressure on a lot of Chinese companies. One example is the recent sanctioning of Alibaba, which led to massive losses in the company. These sanctions came when Jack Ma gave statements that the CCP regarded as offensive to the government. This situation, though, is not unique to Alibaba alone. Many companies also suffered the same fate under the watchful eyes of the CCP. If a company grows too large, the CCP will immediately try to control it to stop the company from gaining too much power. This is bad because this limits the company's growth and puts a cap on which direction the company should go. This is market manipulation. The CCP even went as far as inflating the Chinese stock exchange, which resulted in millions of money lost from unknowing investors. Despite the CCP's promise to ease strict regulations on business, this is not guaranteed. They've been spouting the same promises since ages ago, but nothing changed. Instead, China has only become uninvestable over the years, and even foreign investors are now hesitating to enter the Chinese market. So, if you have Chinese stocks in your portfolio, watch them closely and make sure you are ready for a ride in case China's economy takes a crash. Challenges and effects of domestic and foreign policy. China's domestic and foreign policy is one of the major reasons why its economy is bound to get worse. Currently, the country has weak and unstable ties with the rest of the world. And this is bad. You see, China is an export nation. It exports medical equipment, optical gear, textiles, clothing, data processing technologies, consumer electronics, and many more. If their policies continue to go against their global customers, then their economy will surely suffer as trade agreements will become fragile. This is the reason why many analysts say that in about 10 years, China will transition to become a service-based industry if it wants to continue growing. The Russian invasion of Ukraine did not help as well, as some investors fear that China might face economic sanctions as well because of its close ties with Russia. Although nothing has been done yet that would indicate the impositions of sanctions against China, it is still possible, which makes some investors wary. The domestic issues of China are also another thing that threatens the country's economy. It has an aging population. With the continuous persistence of the low birth rate, China will someday have too many elders and a small working population whose tax will no longer be able to support the large base of retirees. COVID-19 lockdowns in Shanghai. Recently, Shanghai went into another set of lockdowns. This will of course have an obvious negative effect on the country's economy, as Shanghai is China's second largest city. If lockdowns in Shanghai continue to persist, it is estimated that it would impact the entire country's economy by about 0.4 GDP. This might sound small, but considering the size of China's economy, this involves a lot of money. China has been implementing lockdowns in its cities since 2020. It's nothing new. This recent Shanghai lockdown will only further affect the businesses in the city. That includes the Apple factory and Tesla Gigafactory, which might decide to relocate elsewhere if these lockdowns continue. If this happens, this will be a terrible financial blow to China as these businesses bring taxes and employment. Another thing to note is the supply chain issues. This has already been a problem before, but this will be further aggravated after locking down a city as big as Shanghai, a city with a population of almost 30 million. China is in big trouble. This is the reality, and with all the issues we've discussed above, it's no wonder why their economy is all messed up. And if one day their economy crashes at its lowest, then we'll just have to wait and see how the dragon will react. And those are the reasons why China's economy has been in a decline recently and is continually getting worse and worse. We definitely have to be on the lookout as to what will happen next, what China will do to recover, and how it will act to pull up its economy. What are your thoughts on this? Do you think international investors should deal with China at all? Or is there an investment potential in this Chinese economy crash? Let us know in the comment section below. And with that, thank you very much for watching. If you like what you've watched, stay tuned for more videos. Bye, financial buddies!